Hello and welcome to Business Incorporated Live on Channels Television. It's another trading day in November right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. As the global work pool grows, we analyze remote work opportunities in Nigeria. And in Egypt, the US dollar exchange rate rises in 10 Egyptian banks. Plus, the Kenya Ministry of Agriculture announces new price for a 90-kilogram bag of maize. And it's great to have you join us. I'm Ladi Williams. Let's get a check on the markets now. We know investors are just bracing for the U.S. elections and not much positions, being taken. But we see gold is trading narrow in the narrow range today as investors are staying away from making big positions ahead of the U.S. presidential elections. $2,733. That's for spot gold down 0.1%. We know gold has had a monster run this season. U.S. gold futures $2,742, also down 0.1%. Let's get a check on other metals that we track now. We'll see the likes of palladium staying in the green, up 0.2%. Platinum, $982 per ounce in the red, while we see spot silver unchanged. So the bulls there are picking which metals to dive into. But let's get a check on the oil market. We see oil prices ease slightly today as the markets are also bracing for uncertainties right there with the U.S. election, $75.05 a barrel. That's for Brent, marginally down 0.04%. So not big moves upward or downward at this point. U.S. grade, $71.43 a barrel, also down marginally at 0.06%. We're seeing in that market, U.S. WTI, that traded about $71 in the previous trading session. But at the end of the day, investors are just watching what's going to play out. But it'll be interesting to see how the markets react once we have the winner for the U.S. presidential elections. But earlier today, Mr. Bismarck Rouhani called for calm, highlighting the need for more enlightenment and interaction on the proposed tax reform. Mr. Rouhani believes that the changes proposed will benefit all levels of government, as well as businesses and the people. Take a listen.
The VAT, the exemptions are so much that people, the ordinary man, will pay less, and that is what the tax reform is saying. Two, that the federal government that was taking 15% of all the taxes collected, all the VAT collected, is now going to get only 10%. Three, is that it doesn't just go to the state, it goes to the federal government and the local governments. And so the question is, how much are they going to collect? And the most important part of this reform is that VAT today, if Nigerian breweries is producing beer in Lagos and sends out the beer to Kaduna or to Port Harcourt, the VAT is, in the policy, the VAT accrues to Lagos State, not to where it is, where the consumer is. Now, this new proposal says that the VAT is going to go to the state where it's consumed, and that is where the man who is buying it is. He's the one that bears the burden of the tax, and he should get the benefit of the tax derivation. So what it means, therefore, is that Nigerian breweries or Guinness or Dangote will send out invoices, to their distributors, and from the address of the distributor, you know exactly the state where that consumption is taking place. So this is a much more efficient, more equitable, fairer, and easier to administer tax, the way it is being proposed. Therefore, there's no reason, as a matter of fact, there's no reason why the states should go against it. I think there's a lack of understanding or lack of communication of the true objective and the process itself.
And now to our first conversation, we see Nigerian bank customers have had to endure service disruptions as the financial institutions embark on system upgrades. Commercial banks are upgrading their technology infrastructures to improve service delivery and reduce costs where possible. Well, joining us to discuss the state of things right now, we have Mr. Tajuddin Ibrahim, who's the Director of Research and Strategy at Chapel Hill Denham. Great to have you on the show.
Thank you for having me on the show, Ladi.
So it's been a while since the banks started the upgrades. Are we starting to see light at the end of the tunnel for bank customers? Because we've had complaints, upon complaints of some people trying to send money, the money comes back to your account, and the receiver doesn't get it.
So I think all of those complaints are going to fizzle out over time because it looks to me like what the banking sector is going through currently is a complete, upgrade of their, application in terms of core banking application. And when you have a major upgrade or a complete move to a new system in terms of your, application, you will likely see or experience all of these glitches that customers are experiencing. I think it is going to be short-lived, and I reckon that the positive impact it is a lot more compelling over the medium to long term. It is important to note that the banking sector as we speak is dealing with about 63 million BVNs as we speak. That is a remarkable increase of about 74% compared to about 36 million BVNs about 5 years ago. So that jump, for instance, speaks to the need for the banking sector to upgrade their operating system in terms of the application. So I recognize that some customers of banks are currently facing difficulties, but I believe that those difficulties will be short-lived because it is in the first instance in the interest of the customers. That is why we are seeing those upgrades.
And do you think maybe the banks could have done the upgrades one at a time and spread it way into say 2025?
Well, I think there are two types of upgrades. In my view, I think we have the regular maintenance of applications. All of those do not require a major or a complete shift. So all of those ones can easily be completed within a couple of hours as communicated by the banks. So, but for major system upgrade, like the one that some banks are currently embarking upon, I think the best is just to do it, once and for all. And, that is what we currently are seeing. I reckon it is not something that can be adopted in phases. It is more like something that has to be done, once and for all because it is a complete shift. So like a new core banking application. I think that is what the situation is, and I reckon that it can be completed this year. And by next year we'll be talking about a lot more seamless banking in terms of the channels of banking in the country.
All right, can you give us an estimate on the impact to businesses and transactions so far? And we see the banking counter on the NGX doing pretty well. At this point, it's outperforming the all-share index. At this point, it seems the bank bulls don't really care about these upgrades, or they seem optimistic about them.
So all of those upgrades, largely speaking, will be reflected in the customer deposit numbers, and the customer deposit numbers that we have seen for banks are still on the robust side. And with a strong platform, I think the outlook for customer acquisition, customer deposits in the sector is positive. If we now talk about the performance of the banking sector in the first 9 months of this year, the performance has been robust, as indicated in the numbers published by the banks, largely because we have number one, high interest rate environment. Number two, we have more customers of banks doing banking transactions, sending money, transferring money, making payments using digital channels of banks. So that is also supportive of the performance of the banking sector in the first 9 months when we took look at the non-interest income of the bank. So those two income streams have, broadly speaking, been supportive of robust performance by the banking sector. The interest income, part of the business, and the non-interest income part of the business. And the outlook, to my mind, is positive.
For a time where I'm not afraid, when I'm trying to make some of these transactions on the apps, afraid of it failing. But hopefully we all enjoy from these upgrades. Thank you so much, Mr. Tajuddin Ibrahim, Director of Research and Strategy, Chapel Hill, Denham. Thank you. All right, now let's go to another conversation. Now, see, the landscape of work has undergone a massive transformation in recent years. And nowhere is this more apparent than in the field of software engineering. With the rise of remote work, software engineers across the globe, including those in Nigeria, are now tapping into the opportunities of what was once beyond reach as companies embrace the flexibility and global talent pool that remote work offers. But let's dive into how remote work is reshaping the software engineering industry, especially for the Nigerian space. Joining us for this conversation, we have Bolaji Akonde. He's a software engineer at Yelp. Joining me via Zoom. Great to have you on the show.
Yeah, nice to be here. Thank you.
So can you give me an overview of how remote work is reshaping the software engineering field, especially for Nigerian engineers? Because I know at this point we have a couple of people that work from home but are working internationally and somehow bringing in some nice foreign exchange.
I would say remote work has transformed the software engineering field by dismantling geographical barriers and creating a global talent pool. Engineers can now contribute to projects across the world, irrespective of their physical location. So this shift has particularly benefited Nigerian software engineers who previously faced challenges in accessing global talents and due to visa restrictions, relocation costs, and other logistical barriers. So now talented engineers can work with international teams, apply their skills to global problems, and earn competitive salaries while staying in Nigeria. So this trend has also led to a more diverse representation in tech, with Nigerian engineers bringing unique problem-solving skills and perspectives developed through dealing with local challenges like inconsistent infrastructures and limited resources. So as a result, Nigerian engineers are not only participating in the global market, they are shaping it, bringing insights from one of the world's most dynamic and rapidly growing tech scenes. For many Nigerian engineers, remote work also offers an avenue for career growth that was previously limited by the scarcity of local tech companies with international reach. So this allows them to gain exposure to advanced technologies, work on cutting-edge projects, and develop a global network without leaving the country. So these exposures helps them build portfolio that rival those of engineers in tech hubs like London, Silicon Valley, or Berlin. The transition to remote work has, in essence, leveled the playing field, allowing Nigerian engineers to compete on merit and skills alone, regardless of their physical locations.
Yeah, I'm sure it must feel very nice, earning in foreign currency, at this time. But how are Nigerian software engineers competing with, engineers from other countries in the global market? Are our engineers getting, good demand for their talent?
Yeah, I would say definitely Nigerian engineers are in good demand. So Nigerian engineers are proving to be great competitors in the global market because they combine resilience, creativity, and the ability to adapt easily with strong technical capabilities. So many engineers in Nigeria have developed a unique approach to problem solving. And like I said, they are shaped by the infrastructure challenges we face daily. So these engineers bring a high degree of adaptability and resourcefulness, which are valuable in the fast-paced world of tech. Additionally, Nigeria has a highly active tech community with engineers frequently engaging in hackathons, contributing to open source projects, and participating in professional organizations. These experiences allow them to stay at the forefront of technological advancements and showcase their skills to an international audience. Moreover, Nigerian engineers are taking advantage of global freelancing platforms like Upwork, TopTal, and Soaring, which allows them to compete for international projects. So by building portfolios, earning positive reviews, and completing these complex projects, these engineers from Nigeria gain credibility and access to better opportunities. Another critical factor in their success is their cost competitiveness. Nigerian engineers can provide like high quality services at a fraction of the cost compared to engineers from other regions. So by combining their technical skills with affordability, they offer exceptional values to companies seeking to optimize their budgets without compromising quality. So this combination of skills, adaptability, and cost effectiveness has positioned Nigerian engineers to be one of the sought after talent pool in the global market.
Yeah, quite interesting. But talking about skills, what would you say are the most essential, for Nigerian software engineers, who want to succeed in this remote roles?
So in order to succeed in the remote world, I would say Nigerian engineers need to develop a well-rounded skills that meets international standard. So core technical skills such as proficiency in programming language like Python, JavaScript, Java, those are foundational. So if we are going like to front-end development, so they need to be proficient in React, Angular, and Vue.js. If we are talking about backend roles, they need to be proficient in Node.js, Django, Ruby on Rails. If we are looking at engineers that focus on cloud-based technologies, then they need to be conversant with cloud platforms like AWS, Microsoft Azure, and Google Cloud Platform. And also, I think every engineer needs to have a bit of DevOps practice, and they need to be familiar with tools like Docker, Kubernetes, and Jenkins. So in addition to the hard skills I mentioned above, I would say Nigerian engineers also need to cultivate strong skills that are crucial for remote work. So one of that is clear communication. You need to also be able to effectively manage your time and be able to adapt easily when collaborating with teams with different time zones and cultural backgrounds. So you must be comfortable using project management tools like Jira, Trello, and Slack to stay connected. You must also be able to be proactive towards problem solving and be able to solve problems independently because there's a barrier of physical proximity and that's not an option. So you need to be proactive.
Right. So, I know a lot of people now are talking about having, side hustles, at this time. So talk to me about how easy or hard it is to, have a regular job in Nigeria and also, maintain a side hustle in remote work.
Yeah, so to maintain, to be competitive in getting a side hustle, I would say you need to be up to date with building your skills. You need to stay up to date with emerging trends, new frameworks, and best practices. So we have online platforms like Coursera, Pluralsight, and Udacity, which offer like specialized courses and certifications in areas like machine learning, cloud computing, and cybersecurity. So by obtaining these industry recognized certifications, such as like AWS Certified Solution Architect, Google Cloud Engineer, or Microsoft Certified Developers, you can demonstrate your expertise to international employers. So these certifications act as proof of competence, providing a competitive edge when applying to global roles. Also, one other thing that is really important is networking and community engagement. We have platforms like LinkedIn, GitHub, and Stack Overflow that offer you the opportunity to connect with professionals worldwide. You gain insights from experts and showcase your work. Also, actively participating in coding competitions, contributing to open source projects, and joining online communities help Nigerian engineers build an international profile. You can participate in hackathons and coding challenges like HackerRank, Code Wars, Lead Code. That helps you improve your coding skills, problem-solving skills, and familiarity with interview-style questions. So these activities prepare these engineers for technical rigor of interviews and assessment that are used by these global companies. In general, a strong online presence combined with these skills will ensure that these engineers remain visible, credible, and competitive on the global stage.
All right. Before I let you go, what do you see for the future of remote work in Nigeria?
So the future holds like a really immense promise for Nigerian engineers. The demand for skilled tech talents is growing. And as more companies adapt remote work as a permanent strategy, I think Nigerian engineers will almost always find more pathways to international career. So once they have a solid technical foundations, I think they are well positioned to advance into higher level roles such as tech leads, engineering managers within these remote teams. So this shift not only offers like personal growth, but also contributes to a broader vision of Nigeria becoming a hub for tech talent, recognized globally for the contributions to software engineering. So with more infrastructure investment in Nigeria, including better internet connectivity and more power, stable power, so remote work will become accessible. Nigerian engineers will be able to compete for top-tier roles and lead initiatives that contribute to the global tech ecosystem. And the growing acceptance of remote work, coupled with Nigerians' vibrant tech community, suggests that we will see a significant rise in Nigerian-led startups and innovation hubs that cater to a global audience. Nigerian engineers are positioned to take advantage of these developments, driving growth and innovations in both local and international markets.
Right. I guess, at this point, to really do well with the remote work, you have to have strong internet and access to stable, power supply. I guess with the salary, you can afford band A, at this point. Thank you so much. It was great having you. That's Bolaji Akonde, software engineer at Yelp. Thank you.
Yeah, thank you for having me.
I'll take a break now. When we come back, we head straight to the markets. That's in a moment. Stay with us. All right, let's head straight to the market now. And guess who's back? Will Ebon.
Good afternoon, ladies. Good to be back.
Welcome.
Yes, but back to a negative start.
Yeah.
Well, not a negative start for the market, because the market was negative yesterday. So it's more like a continuation of the negative sentiments we've been seeing.
So since you've been gone, not much changes for the local boss.
Oh, not much.
Still around the same level that you left it.
Yes.
But let's see if you can catapult the market now.
I've got that magic
Maybe.
that brings the market around. We'll see that turn around. But let's just kick off with market sentiments. It's intraday. We see Nigeria, most indexes in Africa were mostly positive, except for we see that NGX ASI dropping 0.13% at 96,778 points. And that's mostly due to O&O, the stock price shed 9.98%, nearly 10% at intraday. And this is because it reported a disappointing half-year result, and investors had been putting their hopes on O&O. But let's see if they make a turnaround in the third and fourth quarter of this year. The fourth quarter of this year, we're waiting for that. Now, we're seeing also GSC, that's in South Africa, intraday up 0.11%. at 86,317 points. Let's look on the other side. We see EGX in Egypt doing not badly as well, 0.36% at 30,000 points, climbing higher. We're seeing that performance for that index. And then we see the index in Kenya closing down 0.53% at 116 points. At least it's still above the 100 points it's known for. But let's just look at other markets now and see how they're performing. That's talking about the fixed income markets. And we're going to be looking at Caleb Alimi, is the chief dealer at Providence Bank. Is going to be sharing more insights as to what's going on there. We had an OMO auction today. Caleb, good afternoon. It's good to have you on the program. Could you talk to us about this OMO auction that was conducted today? We saw about 300 billion naira on offer across three tenors. That's the 91, 182, and 364 days.
Thank you, Will. Good afternoon. Thank you for having me. Yes, just as you came on the show, the OMO results, the result for the OMO auction just came through. The 95-day and the 179-day saw no auction at all. There was no bids there, no subscription. So there was no sale in that area. However, the 361-day paper had a subscription of around 1.44 trillion for an offer of 250 billion. And the CBN actually sold it all. They sold it 1.44 trillion that was subscribed for at a maximum rate of 24.28, which is sort of, about the same level they sold the previous ones. It gives us a yield of around 32%, one of the highest yields also that we've seen this year. I think the surprise factor is that, market was only, system liquidity was only positive by 237 billion today. We've had this system positivity for a few days now, almost a little about a week. On Friday, market was about 398 billion long. On Monday was 375 billion long. That's positive. And then today was 237 billion positive. And CBN came to, with the intention of mopping up about 300 billion, but has succeeded in mopping up 1.44 trillion. So this just reiterates the fact that this CBN is, hawkish. Their body language is contractionary, and they'll continue to be contractionary. This means market will go into a negative now, and we expect interbank rates to, which have, formerly been at 19%, to go to around in 32% before the end of today.
Wow. So if we're seeing interbank rates jumping that high, what should be the expectations in jumping other rates for fixed income instruments across board?
Yeah, so what's going to happen is this has set the tone for fixed income instruments across board. Largely is driven by liquidity. And once the CBN dictates the direction for interest rates and for liquidity, the rest of the yield curve follows it. So we expect that market will continue to be bearish for treasury bills and for bonds going into for the rest of the week. There is a treasury bill primary market auction tomorrow where they'll be offering a little over 500 billion in total across 3 maturities on offer. We expect that rate is actually going to go up now because of this liquidity situation that has just been triggered by the CBN auction. We expect that the 1 year, which closed formally at 20.65, should print northwards of about 21% when tomorrow's auction comes.
Okay, so we've dealt with local markets. Let's see how markets or sentiments or activities from other parts of the world are going to influence the markets in Africa, especially Nigeria. U.S. elections are, in the heat of the elections rounding up today. We saw their safe haven treasury yields decline yesterday, and their expectations of a 0.25% cut by the U.S. Fed. How do you see the Nigerian markets, African markets reacting to all this?
The activities of the US Fed, especially this rate cuts, and rate cutting is positive for African markets. What happens is you have yield hunters who leave the so-called safe haven and come to regions like Africa for better yield pickup. I mean, if they can convert their dollars to naira, they'll be getting something about 32% on their investments, which they will not get on the dollar. Once the US Fed continues to cut rates, we'll find that all of their own yield curve will come, would steepen, which is it will come lower. Once that happens, it becomes positive for us as a country. First of all, it means we can approach the dollar market to borrow cheaply through euro bonds. The rates will be lower than what it used to be. That's one. Secondly, we also have portfolio investors that will be looking for yield pickup across the world. Nigeria will become very attractive to them, especially if we continue to, offer this sort of returns, 32% yield.
Okay, so what instruments are investors looking at, market players looking at currently at intraday, saying that the OMO auction just, was done and dusted? You just tell us what end of the curve investors are trading at and the secondary market.
Yeah, largely we've seen a lot of interest around the 93-day handle. Given that there's an OMO auction tomorrow, you just find that we've seen a lot of, investors, more like portfolio investors, that's local portfolio investors coming to pick up some of those securities at the secondary market because the yield is better. The primary market probably close around the 17%, at the secondary market somewhere around the 19%. So you can get a positive pickup if you pick those securities from the secondary market, and you're still better off. So we've seen a lot of demand around the 91 days and the 180-something days paper currently.
Okay, thank you so much, Caleb Alimi. We'll look forward to the outcome of the NTB auction tomorrow. Thank you so much, Caleb Alimi, Chief Dealer, Providence Bank.
Thank you for having me. Good afternoon.
Now let's look at Middle East markets now. We see stocks were mixed at intraday as investors took a cautious approach ahead of the U.S. presidential election. Well, we saw Saudi Aramco reporting a drop in quarterly earnings. Let's look at the markets, how they reacted. Well, we see Abu Dhabi at intraday 0.36% up. Dubai also up 0.04%. Let's look at other regions, especially where we have the Saudi listed. We see Saudi's index down 0.59%. That's the Tadawul. It's bringing that in the ASI down 11,968 points. Now we see Qatari index also down 0.02%. We're looking at this Saudi Arabia's, weaker than expected reports. We also see, but they're keeping that dividend and maintaining that dividend at 31.1 billion for the quarter, despite that, disappointing report that they gave out there. But let's look at stock futures in the US to see how they performed ahead of the elections. Major indexes were down yesterday, they declined, but we see stock futures slightly higher today as markets are bracing for this election. We see Dow Jones, that's the futures gain 0.13%. That's a modest gain. And S&P futures, we see 0.17% up. NASDAQ futures also up 0.26%. 0.27%. Now, in overnight trading, I was speaking, American software and data analytics firm Palantir shares surged about 13% after strong earnings and optimistic revenue forecast, while we see NXP, that's a semiconductors company, sliding due to a cautious outlook amid economic worries. Now, the election race appears to remain tight between former President Donald Trump and Vice President Kamala Harris. Investors are also eyeing Congress, that's what's going on there, as a one-party sweep could lead to big changes in spending and tax policies, but that's most of what the citizens are looking out for, how taxes will impact their lives. And also the Federal Reserve's November decision rate is set for Thursday. Markets are expecting, as I said earlier, a 0.25% cut in interest rates after the September's reduction. That if that happens, that'll be 2 months in a row, and we'll see how that pans for the market. Now let's look at Asian markets, how the results, how they closed the market with. It was mixed sentiments at the close of business today. Investors are gearing up for the outcome of the U.S. elections and the potential rate cut from the U.S. Federal Reserve this week. Nikkei, that's in Japan, was up 0.2%. The Kospi was down, however, in South Korea, 1.02%. And the Hang Seng Index was up, that's in China, 2.14% at 21,006 points. And we see, let's look at other aspects of the market, as in Shanghai, in China, that's mainland China, also up 2.32%. Looking good for them there. We also saw that Morgan Stanley also got an approval to, launch derivatives, to launch into the derivatives market in that country. And that's the second entrance, very major for the China's market. So seeing that positive reaction there. Now the Nifty 50 in India is also up 0.37%. Ladi, a lot is happening here.
Right.
Looking at the US market, some investors are just cautious, but some of them are optimistic because of the US Fed potential rate cuts. But they're also watching what's going on in Congress. There might be a one-party sweep, as I mentioned. If the one party decides to win, manages to win the presidential and the legislative, and and the other houses, what are we going to have?
Yeah, so much to unpack there. But I'm waiting to see, post-elections, how it all plays out, and we see all those investors on the sideline. Right now, we see if we're going to pile cash, back into this market. Thank you so much, Will, there, and welcome back. Welcome back to the market grind there. All right, now let's get a check on what's playing out in the UK. We have Juliana joining us. So it's great to have you, Juliana. So we know two of the UK's biggest mobile networks are set to merge with three other companies, but I'm trying to wonder what the impact of this £15 billion merger between these networks, what would that have on the market and consumers in the UK?
Good afternoon, Laddie. Yes, well, there's been lots of discussion about this proposed £15 billion merger between the Free Network and Vodafone. It was first proposed last year, and it's caused quite a stir within the sector, because if the deal does get final approval, then it would make this new firm the largest 5G network provider in Europe. So there's been lots of consultations and discussions about it over the past 12 months. And there has been a hint today from one of the regulatory bodies who are looking at the detail, and that's the Competition and Markets Authority. They put out a release this morning which suggests that perhaps the deal could go ahead if both Vodafone and Three are able to mitigate some of the concerns. And some of the concerns that they have, of course, are about stifling competition and potentially making the bills of the 21 million customers I think they would have collectively much higher. So I believe both Vodafone and Three they've got about 4 to 6 weeks, I believe, to make sure they satisfy the regulatory bodies. And so it could go ahead. And I think, to be fair for the Labour government and for British consumers, this would be quite good, because believe it or not, Laddie, there are still major areas, swathes of areas across England, in Wales and Scotland too, where it's really difficult to get 5G. Of course, we had the issue last year with China when the then Deputy Prime Minister Oliver Dowden decided to rip up Huawei from our 5G network infrastructure. And that's really put Britain on the back foot. So I think there does appear to be some political backing behind this deal so that, of course, we can be competitive and people can be anywhere in the country and be able to receive a good signal. So it's still not confirmed yet, but we've had that hint this morning from the CMA, which does suggest that perhaps regulators are softening. And if they can tick every box to make sure consumers are protected, then this deal will go ahead.
Right, I guess it's a wait and see at this point. But how are the UK markets, how are they looking today?
The markets are in tip-top shape at intraday. Goes without saying that, all eyes are on the US election. Polling day is here. We've seen live pictures all across the UK network showing that polling stations have opened. I know that gold and silver are both rising significantly. Oil is also up. There, of course, is volatility. I think there are fears, of course. We know if Trump comes in, then, everything gets ripped up and we start again. I don't think anybody wants to start again. But alas, the polls are so close. However, the UK blue chips still very positive at intraday. The FTSE all share is up by 0.35%. The FTSE 100, the UK blue chip, also up by 0.35%. The FTSE 250, the domestic market, that's up by 0.36% at intraday. In the currencies market, the British pound currently trading up against the US dollar by 0.19%, though down against the US dollar, down also against the euro by 0.03%, and up against the Japanese yen by 0.13%, Laddie.
All right, Juliana, thank you so much. I guess between today and tomorrow, we'll all be able to breathe finally when we get the results from the elections. All right, now let's get a check on what's happening in Europe now. See, German companies are wary of change in U.S. economic policy after the election. According to a new survey, well, join us with more is DW correspondent Chibona Chimbelu. I'm good to have you, Chip. So can you tell us more about what the survey is saying?
Thanks for having me. Laddie, German companies are waiting to see what the future economic policy of the U.S. will bring. And that largely depends on the outcome of the U.S. elections today. Now, that's according to a survey by the German Chamber of Industry and Commerce. Any tariff increases on European exports could pose a risk for German companies. And for Germany's export-oriented economy, tariffs and any trade barriers would be an expensive disaster, says the director of the German Economic Institute. Now, when it comes to industries that are especially vulnerable, it is the makers of machine parts, cars, and drugs that are very dependent on trade with the US. But despite some of the fears, German companies expect business in the US to remain stable, according to the survey. 38% expect better economic developments in the US over the next 12 months. But obviously, that is something that the election results could change for better or worse.
And how have Biden's economic policies affected Germany-U.S. trade?
One of the Biden administration's most important and far-reaching economic policies is the Inflation Reduction Act, the IRA. And while there were fears that the IRA would be bad for European businesses, German exports to the U.S. have actually benefited, according to Business Daily Handelsblatt, which cites a study by the German Economic Institute. The Inflation Reduction Act went into effect in the second half of 2022 with the aim of encouraging investment in domestic energy production and promoting greener technology, among others. Now, in Europe, there were fears that it was protectionist. But last year, German exports to the US rose, and Americans were the biggest buyers of German goods. Exports from Germany reached 157.9 billion euros. So that's why what happens in the US elections matters so much here. Now, that said, the long-term impact of the IRA still needs to be studied. But for now, it appears to be benefiting German exporters too, at least according to the study by the German Economic Institute.
All right, what's playing out in the European markets?
Laddie, European markets may struggle to find direction today because of the elections in the US. Many investors will be hoping the US election today is not the calm before the storm. In Europe, traders are on edge about how Trump's protectionist policies could affect trade with the US. So the hope here is that Kamala Harris will win and continue with the Biden administration's economic policies. Now, any prolonged uncertainty about the election results could roil markets. So all eyes will be on the battleground states after midnight GMT. And on the corporate calendar today, it is German logistics firm DHL and Europe's biggest online fashion retailer, Zalando, which are among the companies reporting earnings today.
All right, thank you so much, Chip, there giving us the update from Europe. All right, we'll see this week, leaders and citizens across the continent are closely watching the next U.S. president policies on immigration, emissions, trade wars, public health funding, and peacemaking efforts in the Horn of Africa. Our correspondent, Innocent Samosa, filed this report.
U.S. presidential elections have always been of interest to Africa because of the role the United States plays in the stability and development of the continent. Now, we're on the streets of Johannesburg talking to citizens. We want to find out, why does U.S. presidential elections matter for Africa? American elections, do they matter for the African continent in your view?
It does to some point. I think initially economically it does matter, because it affects our economy, the rands compared to the dollar to some point, and the relations between the two countries, how one president would view our country and how we would view their country as per se. It plays a part in the matter of also affecting the tourism part of things, because a new president may mean new rules, which may affect how we look at things, to say Africans are no longer allowed in America, America are no longer allowed in Africa. So it does affect us in a way, even though we may not take it seriously at some point. Yeah.
So do you believe that Trump can be able to mediate peace in the Middle East, Gaza, and also the Russia and Ukraine war? He'll be able to mediate peace. Do you believe that he has those capabilities?
Of course, because if we look at his track record, when Trump was in office, Putin never took even a single square inch of any country. And when Trump was in office, we had the Abraham Accords. There was peace. So we know from a track record, if you're going to hire a CEO of a company, you need to get his track record. You don't look at anything else. What does his CV say? His CV says peace. So that's why I think Trump would be the best for our time, because we can't roll the dice on someone we don't know, who has been in an administration that has only propagated war and has had a disastrous exit out of Afghanistan. All those things under her administration. Putin literally took Ukraine, because you can say that Ukraine is not even a country anymore. It's been taken.
Donald Trump or Kamala Harris?
Kamala Harris.
Why Kamala Harris?
I love women. Women power.
Okay.
Donald Trump.
Why Donald Trump?
Oh my God, because that means support black people. So we need him in the world. Yeah, for sure.
Yeah. As a black man, you want Donald Trump?
Yeah, I'm sure most of the black men, we needed Donald Trump. Yeah, for sure. Yeah.
Kamala Harris or Donald Trump?
Kamala.
Why Kamala?
Bro.
Africa has not featured much in the foreign policy discussions leading up to the U.S. presidential elections, but the outcomes will have a significant impact on the African countries and beyond. From Johannesburg, South Africa, Innocent Samos, Channels Television News.
All right, Samosa, thank you so much for that. All right, so another conversation now. We see the National Bureau of Statistics reported that in September 2024, the average retail price for refilling a 12.5 kg cylinder of cooking gas in Nigeria surged by 76.41% year on year, reaching about 16,313 naira. This increase in cooking gas prices has varied across states, with the highest at 17,992 naira in River State and the lowest of 13,983 in Adamawa State. Well, let's discuss this now with Teva Kumeka, is a research manager there at Financial Derivatives Company. I'm great to have you on the show. So do you see these prices, coming down? It seems everything is going up at this point.
Yeah, good afternoon, Ladi. Thank you for having me. Yes, what you read about the data released by the Nigerian Bureau of Statistics is correct. And then let's set the context here. In terms of capacity, Nigeria has about 187 million trillion cubic feet reserve of natural gas. How much do we consume domestically? We consume about 1.5 million metric ton of cooking gas in the country. What do we produce? We export about 60% of what we consume. Then less than 40% of what we consume is produced domestically. So what are the factors driving the increase in prices of cooking gas? One is the currency devaluation, because most of what we consume, the cooking gas, is imported. So we import at high cost of the gas, then that translates to the price to the consumers. The second thing is logistics. The cost of moving this commodity from where it is produced or where at the port where it is imported to the final consumers has cost implications. Then we have issues of global prices of cooking gas increasing from last year to now. So all these factors translate into the high cost of cooking gas that we're seeing at the moment.
But Teva, with this new drive for compressed natural gas, how would that impact cooking gas prices? Could we expect cheaper prices? Everyone's talking about CNG at this point.
Yeah, the transition from to CNG is to see that how do we move away from the normal fuel for fueling our vehicles to CNG, which is more affordable for the consumers. So the movement to CNG will lead to, in the short term, we increase the prices because there will be diversion from cooking gas to CNG. But as the price increases, this will attract investors. As investors come to the market, then in the long run, we're going to see more production of the cooking gas, then the price is likely going to come down as the production increases. But what is more interesting in all these things is that the high cost of cooking gas translates into the cost of the households who are already grappling with high cost of living inflation and cost of living crisis. So it's going to put more pressure on families who will face more challenges in taking care of the household and settling a lot of bills, which will divert their resources from buying the high cost of cooking gas and taking care of other household needs that's required by the individuals.
Right. Okay. All right. Thank you so much, Teva. Definitely, we're hoping the prices somehow miraculously come down before the festivities, come upon us. Thank you so much, Teva, for giving us the details there.
Thank you very much for having me.
All right, now let's head straight to the crypto market. Now we see on the screen, it's mostly red at this point, just a few pockets of green, and the king of the meme coins, that's Doge there, fully in the green. Let's look at the sentiment now. How traders feeling in the market? Look at the fear greed index. It's still a greedy market at this point, but we know traders here, they feel, some of them feel that Donald Trump presidency would be good for crypto, but let's see how the markets react. Let's look at the headlines now. The market, we see Bitcoin mining in Germany is taking a full throttle there with the Deutsche Telekom subsidiary MMS in collaboration with bankers Meta there. They're pushing to get clean energy for mining Bitcoin. Then we see Mt. Gox moving about 32,000 plus Bitcoins at this time. So investors are wondering what are they going to do with that Bitcoin, about 32,000 units. Then UK pension fund, they're making a historic investment in Bitcoin. As the UK pension fund become the first in the country to add that's Bitcoin to its portfolio. And the pension advice firm Cartwright is saying that they recommended a 3% Bitcoin allocation for that fund. So quite interesting stories there. Then now let's look at another issue. We see in the market, cryptocurrency market in Africa has seen quite a significant push at this time with different trends, growing right now. But let's unpack the recent trends now with Lasbury Oludimu. She's a VP Global Operations at Yellow Card, joining me via Zoom. Great to have you on the show.
Thank you, Ladi. Great to be here again.
So what would you say were the significant developments and trends and challenges in Africa's crypto market in 2024?
Ladi, we continue to see growth. And I think one significant trend we have seen in 2024 is this sharp increase in stablecoin usage. I'm not. I think you are aware of, Chainalysis, right? There is this analysis by Chainalysis. Stablecoins now count for approximately 43% of the regions that the sub-Saharan African transaction volume. So, Ladi, in addition to the growth in cryptocurrency, there is also a sharp increase in stablecoin adoption and usage. And also looking at how stablecoin is doing vis-a-vis the big digital asset, which is Bitcoin, we can see that stablecoin has taken over, stablecoin transaction is over 43%, while that of Bitcoin is about 18%. So in addition to growth within the space, we have seen a very sharp increase in stablecoin adoption and stablecoin increase, right? So that's the trend we have seen in 2024. Talking about the challenges, irrespective of the growth, we also have challenges, right? One major challenge we have seen in this space is people not being aware of the use case of stablecoin, and that is education. So this is new. It's actually new to everyone, both the players and also the regulators. And education is another challenge we have seen. People are not formally aware. And for us in Yellow Card, this is why we have Yellow Card Academy, where we have taken our time to put up articles and try to educate the customers and also the regulators the use cases of this digital asset called stablecoin. Another challenge we also see in this space is the issue of regulation. Though there has been tremendous change in this space, but regulation has also been a challenge to us in this space. And we see that regulators are trying to do their best. But at the same time, I can still say that this product or this space is wholly regulated.
Okay. All right.
So basically, generally, there has been an increase in adoption, and education and regulations still remain our challenges.
Right. Now, we know most of these companies, in the crypto space, they have to raise money. Talk to me about fundraising, in the crypto industry.
Sorry, Ladi, I didn't get that.
Talk to me about fundraising in the crypto industry. We know these companies have to raise funds, to stay afloat.
Yes. Okay, so I will just talk about fundraising specifically to Yellow Card. We always say Yellow Card is the leader in this space, right, within the African continent, because we are in about 20 countries, right? And for us, fundraising, it hasn't been an issue, and I don't think it will ever be an issue. I don't know if you are aware that we just completed our Series C, and we're able to raise $33 million, right? Bringing our total equity raised so far since 2019 rather, to $85 million, right? And this is from leading global venture capital investors like Coinbase and blockchain and blockchain capital, right? And these two companies, they have over right, so they are really in serious business. So for us, Yellow Card, fundraising has never been a challenge because of the business model and how we have positioned ourselves, and the fact that we keep driving innovative products and expansion within the African continent.
All right, definitely. We'll keep watching and see how fundraising continues for the industry. With what we've seen so far, it seems some investors are still quite bullish on this industry. But thank you so much, Lasbury Oludimush, the VP Global Operations at Yellow Card. It was great having you. Thank you.
Thank you.
All right, so that's the show today. Thank you so much for watching. Remember, you can watch this again on our YouTube channel. You can also flip over to our website and get more information, www.channelcv.com. From me and the team right here at Channels HQ, it's bye for now.